Good morning, investors. You are now on KleverStock with me, Anunjarya, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FBM KLCI gapped higher on Thursday as bullish investor sentiment strengthened, lifted by robust earnings and an upbeat outlook from leading chip maker NVIDIA. Overnight, Wall Street stocks closed higher despite persistent concerns over a potential bubble in the AI sector and delays in key U.S. economic data releases, which have added uncertainty to the Federal Reserve's December rate decision. At the opening bell, the benchmark FBM KLCI climbed 4.55 points to 1,628.44, extending the previous day's rebound and pushing the index back into positive territory for the week. However, TA Securities said the FBM KLCI is likely to trade sideways as investors stay cautious ahead of the delayed U.S. September jobs report, which could offer critical signals on the Fed's next policy direction. It said immediate support will be at 61.8% FR 1,564, with stronger supports at the 50% FR 1,527 and 38.2% FR 1,490. Immediate resistance remains the December 2024 high of 1,644, with the highs of 1,684 and 1,695 posing tougher upside hurdles. Malacca Securities said the local technology sector is expected to see renewed optimism following NVIDIA's strong third-quarter earnings, which should benefit related counters such as Frontcan and Inari Ametron. It added that buying interest has also returned to the construction sector, which bargain hunting seen in stocks like Gamuda and Sunway Construction. It said, "We believe this is justifiable given their discounted valuations and strong earnings visibility, underpinned by various mega infrastructure projects and data center investments in the country." Among the most actively traded counters on Bursa Malaysia, MUI Industries rose half a cent to 6.5 cents, Perak Transit gained 1.5 cents to 30 cents, while AHB eased half a cent to 3 cents. Moving on to local currency updates. The ringgit opened marginally higher against the US dollar on Thursday, extending its recent gains amid improved regional sentiment that continued to lift emerging Asian currencies. At 8 a.m., the local note stood at 4.1475 or 4.1590 against the greenback, compared with Wednesday's close of 4.1480 or 4.1530. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Abdul Rashid said the ringgit's mild uptick followed renewed uncertainty in the United States after unexpected delays in key economic data releases. He noted that the US dollar index rose 0.65% to 100.202 after the US Bureau of Labor Statistics announced it would postpone the publication of October's employment report to December 16. He told such a date means the US Federal Reserve is still flying blind, suggesting it may not cut interest rates when it meets on December 9 and 10, 2025. In addition, the Federal Open Market Committee's October minutes indicated members were generally inclined to keep rates steady for the rest of 2025. Muhammad Afzal said the ringgit had already shown resilience in the previous session, closing 0.31% firmer at 4.1505 against the US dollar, supported by profit-taking on the greenback. He added, given the latest developments, USD MYR pair could trade between 4.15 and 4.17 today, as participants may seek to lock in short-term gains ahead of upcoming US data releases. In early trade, the ringgit strengthened against a basket of major currencies. It appreciated against the yen to 2.6416 or 2.6490, firmed versus the euro to 4.7858 or 4.7991, and advanced against the British pound to 5.4166 or 5.4317. The ringgit traded mixed against ASEAN currencies. It rose against the Thai baht to 12.7741 or 12.8182 and improved versus the Singapore dollar to 3.1755 or 3.1845. The local note was little changed against the Indonesian rupiah at 248.2 or 249.0 and hovered around 7.04 or 7.06 against the Philippine peso. Continuing with national economic updates, Malaysia's trade performance in October surged far beyond expectations, climbing 13.6% to an all-time high of 277.65 billion ringgit, as trade, exports and imports all broke monthly records. According to the Investment, Trade and Industry Ministry, exports jumped 15.7% to 148.32 billion ringgit, marking the fourth straight month of expansion, while imports rose 11.2% to 129.33 billion ringgit. This delivered a trade surplus of 18.99 billion ringgit, continuing Malaysia's streak of 66 consecutive months in surplus since May 2020. Economists said the latest figures reflect the strength of Malaysia's external position, yet several warned that the momentum may slow heading into 2026. OCBC senior ASEAN economist Lavanya Vantakeshwaran said the numbers exceeded expectations due to resilient electrical and electronics demand and strong regional trade flows. However, she warned that the continued strength in E&E exports hinges on the global semiconductor upcycle, which is expected to slow into 2026, adding that weaker growth in China, Japan and the EU would soften external demand. She also cautioned that tariff changes, escalating US-China tensions and sharper than expected slowdowns in major economies remain key downside risks. Still, Lavanya highlighted Malaysia's structural strength, noting that the country has maintained an almost uninterrupted monthly surplus since November 1997, saying that we see the trade and in turn current account surplus sustaining into 2026. Bank Bangwalat Chief Economist Dr. Muhammad Afzaniza Abdul Rashid said Malaysia is cruising at a respectable speed, supported not only by buoyant export but also a sharp rise in capital goods imports, a sign of future productive capacity. He said this places economic growth for 2025 closer to the upper end of the 4.0 to 4.8% forecast range. Economist Dr. Jeffrey Williams said Malaysia's resilience has surprised on the upside despite global tariff volatility, adding that overall trade, exports and net trade are stronger, bucking expectations of damage from protectionist policies. Williams stressed that while global risks are unavoidable, domestic policy will determine how well Malaysia navigates them. He said sustaining the strengthening trade surplus, which had narrowed between August 2023 and mid-2025 before recovering, will be critical for supporting growth and reducing reliance on domestic demand. And now moving on to corporate news update. Prolintas Infra Business Trust reported a softer set of results for the third quarter ended September 30th, 2025, with net profit declining 19.30% to 9.76 million ringgit from 12.09 million ringgit a year earlier. The trust said the previous year's performance had been lifted by an income tax credit arising from deferred tax provisions, making this year's comparison less favorable. Despite the drop in earnings, quarterly revenue edged up 1.88% to 82.95 million ringgit from 81.41 million ringgit, supported by higher traffic across highways under its management. Operational profit improved 7.19% to 47.7 million ringgit, driven by firmer toll revenue and better returns from Sharia-compliant placements and investments. Highway operations revenue rose 3.9% to 82.4 million ringgit from 79.3 million ringgit previously, with Silk recording the strongest toll revenue growth at 5.1%, followed by LKSA at 4.1%, while both AKLE and GCE saw increases of 2.8% each. For the 9-month period, net profit expanded 14.98% to 20.94 million ringgit and revenue increased 2.28% to 242.69 million ringgit. The trust said it remains on course to meet its 70 million ringgit total distribution target for the financial year ending December 31st, 2025, having already declared 34.9 million ringgit for the first half of the year. Chief Executive Officer of the Trustee Manager Project Lintasan Sungai Besi Ulu Klang, Sdn Bhd, Muhammad Idros Mohsin, said the trust is optimistic about its outlook and will continue efforts to position its highway as preferred routes for daily travel. He added that Malaysia's resilient economic performance and the Klang Valley's role as a growth engine provide strong prospects for the group moving forward. And finally, wrapping up, we have major corporate developments and deals across Malaysia. SD Guthrie Berhad disposed of approximately 941.82 acres of freehold land in Kulai Johor for a total consideration of 814.78 million ringgit to a special purpose vehicle, Eco Business Park 8 Sdn Bhd. Wawasan Dengkil Holdings Berhad is expanding its business into renewable energy via a joint venture with Nescon Berhad to develop a 70 megawatt large-scale solar photovoltaic plant in Kedah. MGB Berhad, a subsidiary of LBS Bina Group Berhad, said its Saudi joint venture company MGB Almeria Contracting Company has secured its largest overseas contract to date worth up to 444 million ringgit from Beta Real Estate Company. Dialog Group Berhad has secured a contract worth about 1 billion ringgit from Pengerang Terminals 2 Sdn Bhd to develop new biofuel storage and handling facilities within the Pengerang Integrated Complex. And last but not least, Perak Transit Berhad, whose shares have come under pressure recently, reported a 12.1% increase in net profit to 19.86 million ringgit for the third quarter of the financial year 2025 from 17.71 million ringgit a year earlier, mainly due to the absence of private placement fees and sharp reduction in general and administrative expenses. Now that's the wrap for Morning Bell Updates with me, Anujarya, on KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.